Right. So we've completed with a few integrated case studies and now coming to the concept-wise case studies, right? So if you look at the study material of ICAI, at the end of each particular chapter, right? So these are the ones in the module one, right? After each particular chapter, like if I open the quality control chapter, right? At the end of the chapter, there are some particular, integrated. There's a case scenario given over there, CM Mrityunjay, and then at the end of it, based upon the above, answer the following question. Right. So these are the MCQs which I am discussing with you now. Right. So these are the MCQs which are there in this chapter number 2. Right. So it's the quality control. So all the points questions would be surrounding the quality control. So which is the auditing standard and the quality control standard. We have the SQC and the SA220. SQC1, already to be, scheduled to be renamed as the SQM, Standard on Quality Management, and then it will be 1 and 2. Right? So because engagement quality reviews, for the engagement quality reviews, there is a separate standard on quality management now being issued. Okay. Right. Mrityunjay is the auditor of a listed company engaged in providing services related to the tourism sector. He is practicing as a sole proprietor. The audit of the above said listed company was conducted by his proprietary firm, and the report was issued for 3132. Subsequently, audit report was selected by NAFRA to oversee the quality of service and the compliance with the standards. Necessary information was called from the auditor towards the audit above objective. It was required of him to produce the working papers or to show that the audit was carried out in accordance with the standards on auditing. Details of the audit plan and the details of the risk assessment procedures carried out to identify and assess the RMN in the financial statements were called. It was also required to show how the response to the assessed risk was designed, implemented, and communicated to TCWG. Audit working papers sent by him through email included procedures on how some balances in the financial statements were verified. Also included in working papers were procedures performed by him relating to verification of inventory, trade receivable, and the trade payable. The working paper sent by him to the NAFTA did not include the details on the audit plan and the manner of identifying and assessing the RML. On being asked to respond, it was reasoned by him that audit was properly planned and performed, properly planned and required procedures were carried out in relation to the material items on a sample basis. It has been further clarified to him to the authority that audit was carried out in accordance with the standards, and it was practically not feasible for a firm of small size to make a detailed audit plan. It also put on record with the authority that he had assessed the RMM to be low based upon his understanding of the company. He has further reasoned that assessing RMM is a matter of the professional judgment. Representation has also been made by him stating that communications as required were made orally with the TCWG. It was also pointed to him that EQCR was not carried out. He has answered that no contentious matter arose during the course of audit, and therefore no need was felt to carry out the exercise. So if you come across a difficult contentious matter, you have to take the consultation, but you can take the consultation. But EQCR, before issuing a report of a list, EQCR compulsory. Okay. Right. Now, what does it say? Attention was also drawn to the fact that the financial statements were required to be prepared on the basis of Ind AS. However, at some places in the notes to account, reference is made to accounting standards which are not applicable to the company. These errors have been attributed to the data feeding entry errors by the junior staff. Based on the above, answer the following question. It has been contended by the auditor that the audit was properly planned. He has further stated that it was practically not feasible for a firm of small size to prepare a detailed audit plan. Which of the following views is most appropriate in this regard? Audit was in fact planned as evidenced by the auditor's submission. Although auditor has no record of audit plan, it does not affect the compliance of 220. Since auditor has no record of the audit plan, it goes on to show non-compliance of SA 220, wherein 220 says that you need to do the proper DSR, direction, supervision, and review, engagement, performance. Audit was in fact planned as evidenced by auditor submission. There is an exemption for small CA firm doing away with cumbersome documentation in relation to audit plan. We've never heard or read of any such exemption. Right, so since auditor has no record of the audit plan, it goes on to show the non-compliance of the SA 220 quality control for an audit of the financial statements. Okay. The auditor has assessed the RMM has been assessed, has reasoned that the RMM has been assessed to be low based upon his understanding of the company, and it is a matter of professional judgment. Identify the most appropriate statement. Assessing RMM is a matter of professional judgment. It cannot be demanded how the judgment has been arrived at. Okay. Although auditor has not submitted record of how the RMM was arrived, it does not affect the compliance of the SA 220. Since the auditor has no record of how the RMM was arrived at, it goes on to show the non-compliance with 220. And such a query itself is outside the mandate of the authority, not at all outside the mandate of the authority. So since the auditor has no record of how the RMM was arrived at, it goes on to show the non-compliance with the 220. Okay. Considering auditor's point of view regarding the EQCR, Engagement Quality Control Review, identify the most appropriate statement from below. EQCR is mandatory in such type of engagement. It is not proper for the auditor to bypass such a review. He has violated the mandatory requirement of SA 220. EQCR is optional in such type of engagement. This option is out. No contentious matter arose during the course of audit. Therefore, question of not following EQCR does not arise. Out. EQCR is dependent upon the benchmarks established under SQC1. If these benchmarks are satisfied, such a review is necessary. Nothing like that. Listed entity EQCR compulsory. So EQCR is mandatory in such type of engagement. Considering auditor's reply regarding errors in data feeding entry by junior staff in relation to accounting standards, which of the following statements is proper? Such are examples of clerical errors encountered during preparation of report. There is no question of compliance with 220, or there has to be the review. Work of a less experienced team member has to be reviewed by a more experienced team member. Such examples of clerical errors encountered during preparation of report, there is no effect on audit opinion, and consequently question of non-compliance of 220 does not arise. Such are examples of serious lapses on the part of auditor showing non-compliance of 220. Such are examples of serious lapse on the part of auditor. However, they are not related to compliance of 220. Obviously, they are related to the non-compliance of the SA 220. Okay. And on your overall reading of the case study, which of the following statement appears to be true? The firm has an effective system of quality control. Audit engagement is also done as per 220? No. Firm does not have a system of quality control. Audit engagement is also not done as per 220. Okay. SQC1 is not applicable. SQC1, oh my God, SQC1 so applicable. Quality control for firms that perform audits and reviews of historical financial information and other assurance and related services engagement, right? So SPC1 is applicable. So the firm neither does it have a proper quality control or quality management system, and there is also non-compliance of the SA 220, right? So B would be the correct option.